Now, one stock that is in focus is Zaggle. Let's quickly pull up that one on the screens. They've gone ahead and acquired Dice Enterprise for 123 odd crores. The stock is up at the day's highest levels with gains of 3.5% coming there. The reason why we are having this conversation is the acquisition, which is done at a high multiple of almost 20 times. Talking about Dice Enterprises, that is a spend management startup with FY 23-25 revenues of almost 6.5 odd crores. To discuss more, joining us on the show are Mr. Raj P, Narayanam, founder and executive chairman at Zaggle. Mr. Raj, firstly, welcome to NDTV Profit and a pleasure to speak to you as always. The key question that investors have currently is the strategy behind the acquisition of Dice Enterprises at a multiple of 20 times. What is it that you're seeing in a Dice Enterprise that the investors are not able to?
Sure. So, I would quickly start with, the Dice Enterprise, if you look at why we have acquired it at that price, is that, their current year revenue, which is March 25, is about 12.93 crores. Okay. And in the coming year, which is FY 26, they are going to be at about, 20 to 21 crores. So that 20 to 21 crores just gives us a multiple of about 6. Okay, and which for a company like Dice is fantastic because I'll tell you two things. One is it signals a very, very interesting play in the entire enterprise software and payment segment. Okay, which is very, very difficult to find companies like Dice to be able to enter into this. Okay. Second is fantastic talent. The talent is too good. The founders are exceptional people. They have built this company over 7 years. The talent which they have in terms of overall team structure is great. So what we think is together, we will be able to create a far more greater outcome for both the companies by being able to take this company, to the world. Okay, so a combined entity of Zaggle and Dice would be able to take us to the world in the fintech segment, and the outcome is going to be much, much beautiful. That is why we were willing to give that multiple, and the whole idea, if you look at it, is that some of their if you look at Zaggle Suite, and within Zaggle Suite, the procure to pay piece, which is a great piece, and they have got some very, very marquee clients there. And now imagine that particular piece, if we are able to take it to our 3,400 clients, what would happen. So they have they have a very, very good set of clients, but Zaggle's marketing, sales, distribution power is very, very good, and together we think we will be able to create a very, very large outlier in terms of Dice. That is what is our feel, and we think it's a great acquisition which we have done. Just to look at it.
Mr. Narayanam, the question I have is, the current valuation is seeming expensive at 20 times, but taking FY 26 revenues into consideration, you're getting a multiple of 6 times. Is that what I heard correctly?
Yes. Yes, we are getting just a multiple of 6 times for an enterprise grade software company, which is next to impossible if you really look at it in that space.
Okay. Now, taking that into consideration, then how much will Dice contribute to Zaggle's revenues from FY 26 onwards?
Okay, so these are all completely SaaS revenues, with payment rails which will be brought in by Zaggle. I think we will be able to create a far, far more revenue accretive play. Right now, they are slated to do about 21 crores, next year. But with Zaggle rails in between, I think we should be able to take it to, much, much higher number.
Okay, so how much are you envisioning taking the complementary or the support of Zaggle? By how much will that will that 21 crores scale up to, say, not by FY 26 but by in the next 3 years then?
So next 3 years, if you look at it, we should easily be able to, garner about 100 to 120 crores in terms of, SaaS revenues. SaaS revenues of 120 crores is like a very, very decent and large number. And, within that, if you are able to put the rails of payments, the number could be significantly higher from where we are.
Okay. How much growth can we expect then if we have to look at those aspects? Because I think the street is watching out for the kind of synergies that you're seeing and the benefits that will come in.
First is you also look at the product stack which they have got. Their AI agentic, entire agentic platform is extremely good. They are like far, far ahead in terms of, the AI play. So now taking India to the world, okay, so it's like taking dice to the world is how, I would put it. So with combined savings, so also look at another factor which you probably miss is that the combined savings in terms of whether it is sales, marketing, tech, admin functions, etc., is going to be about 15 to 18 crores. So with that together, I think it's a very, very good play. We have thought about it. We, researched it for quite a long time. And one other thing which I want to point out is, that we were competing with them in at a lot of clients. Okay, now with having acquired them, we would probably become the largest player in the spend management space with probably nobody means nobody coming as, number two, which will up our pricing power. And with that pricing power, we should be able to, have a higher and a better EBITDA than what has been stated now.
Okay. One of the matrix that one of my research analysts, Chinmay, is pointing out is, whilst listening to this interaction, that the revenue has grown at a CAGR of around, that's a compounded growth of around 113% over the last 2 years. And
Yeah.
if I have to take a similar implication into consideration, then FY25 revenue is sitting at around 13.5 crores, which makes
Yeah.
the acquisition at price to sales multiple of 9.1 times.
Which is for the past, which is for the FY25. So if you take it for, FY26, which is typically how you do it, is that you give them next 2 years multiple. So we are like probably by the time FY27 comes, we should be at about 2 times is how we are looking at it.
Okay, okay. Apart from this, the other aspect I want to consider is how will the margins and the return profiles change, taking into consideration the initial spend that has happened of around 123 odd crores. When will it become margin accretive?
So, I think this year, coming year 26 itself, it will become margin accretive. And, overall, because of the savings, cost savings, which we are bringing in by aligning both the companies together, we'll be in a much, much better place to be able to, work on the cost savings, especially on all the parts of whether it is sales, marketing, business development, admin functions, tech cost, all of that, would take a significant benefit for it will be a significant accrual for both the companies.
Okay. Apart from this, how are you looking at Green Edge Enterprises as well? A 27 crore acquisition, revenue
Yeah.
at around 19 to 20 odd crores in FY24. And again, that's done in the month of June itself. So what is the valuation right now and what multiple are you watching out for from the prospects?
So, you're looking at last year numbers, which is,
Correct. That's what we have right now.
that
So
we have right now. Okay, so if you look at FY25 numbers, which is, which March FY25, is that they have done about 36 crores in revenue and 4 crores in EBITDA. In the coming year, which is FY26, they are slated to do about 50 to 55 crores and an EBITDA of about 6 crores. What we look at is that, this particular, it's a beautiful company, which is built by golfers and with international experience. So they are in the bank loyalty space, the space which, we had, not yet entered, and they have, they do redemption of the golf rewards, which is the high-end redemption. Now they have like 7 banks with them. Okay, look at, Zaggle products which are there. And in the bank loyalty space, we were not there. So all this is accretive. And they, in my opinion, next 2, 3 years, you can look at about 100 crores in revenue from them. And with a EBITDA of about 13 to 15 crores is looks immensely doable.
okay. So taking these two acquisitions into consideration, what is the future plan from an acquisition perspective? How much more are you eyeing? In which segments? And taking all of that together, what is that milestone Zaggle wants to achieve in the next 3 years?
So Zaggle, as we, already it's our stated goal that in next 5 to 7 years, we want to become a billion-dollar revenue company. We want to improve our margin profile, to about 13 to 15% in the, coming few years. So for us, we are currently eyeing about, 6 to 7 companies, out of which, when we look at 6, 7, the fructification of this 6, 7 would be probably one or two, because, in India, it's not very easy to get, very clean companies. So overall, if you really look at it, this year we should be at about, standalone basis, we should be able to do about 1800 odd crores, and combined together we might touch about 2100 crores in revenue.
Okay. Mr. Narayanam, other aspect I have is the dependence that Zaggle has on partnerships. If I'm not mistaken, I think banking is the key part of it. Any termination of contracts from there would actually become a negative because of the reliance that you have. How are you looking at that part of the business? Because, interchange fees could adversely affect business, right? So programs and interchange fees account for almost 30% and 22% of your revenues on an average. So how do you move away from that dependency?
So, we have 16 banks. Okay, even if 1, 2, 3, 4, 5, 6, 7, 8 were to go down, wouldn't affect us even one bit. Okay, because what happens is, customer is ours, it is not bank's customer. So we bring, we do partnerships with the bank on the back end side, not on the front end side. So our customer, why would he care whichever bank you are giving it to them? They wouldn't care as long as bank is a, is a good bank. Okay, so what the power which we have, in our hand when we go and sell to a customer is immense. So it is the customer, who is dealing with Zaggle and not dealing with any bank. So in my opinion, bank is, very operatively, a very, very good cog in Zaggle's story. But, there is no overall dependence because we have 16 relationship with 16 banks.
And, the company had allocated a significant amount of funds, I think if I'm not mistaken, 300 odd crores from the IPO towards customer acquisition and retention, which is indicating high cost in terms of maintaining your user base. From here on, is there a change in strategy? When do you see it normalizing? Because these costs seem to be absolutely high, which could dent profitability. But taking into consideration the growth aspirations that Zaggle has, I think there needs to be some normalization that needs to come through.
So if you really look at it, and go through quarter on quarter, our customer acquisition cost is coming down and down. Okay, and that is what, if you see our last quarter as well, it was down. And in the overall, scheme of things, if you look at it, in particular quarters when we are, let's say aggressively looking at growth, there could be, some little bit of bips which we lose. But otherwise, overall stated goal is 13 to 15% of EBITDA margin, and, a revenue of $1 billion is how we are looking at it in next 5, 7 years. So that stated goal, we will tweak internal parts of the business, whichever way, however way we have to do it, but ensure that, we remain on that path and on that goal. And that is what is, Zaggle's endeavor. And the companies which we are acquiring also look at it as are companies in which either they are product accretive, or they are geography accretive, or they are EBITDA accretive, or revenue accretive. So we look at all those parameters, and wherever we see that it's not a fit, we typically, slip it down. We don't really go ahead and acquire it and see, let's see how it pans out. So we don't want to do all of that, and focus remains on that one, two matrices which I told you: EBITDA margin of 13 to 15, and revenue of about $1 billion in next 5, 7 years.
Okay, so I think that's a strong number coming in there, and I think the street will be watching out for the deliverables as well, taking into consideration that the concerns were laid in terms of valuations. But if you're justifying the same right now, taking into consideration the synergies, I think the street should be watching out for so far. But let's wait and watch. Thank you so much for joining us on the show and sharing the views as well. So that's the management of Zaggle.